One of the core focus area for State Bank of Pakistan for last many years has been to increase the financial outreach and financial access to the people of Pakistan. And we were of the view that the traditional brick and mortar structure of the banking system in Pakistan will not be able to do so because of the simple cost benefit analysis. Branchless banking came as an alternative that in our view was something that we wanted to promote, and resultantly we came up with a regulatory framework that in our view was to facilitate the branchless banking. Initially the response from the market was not that encouraging, and in fact it was the State Bank of Pakistan that actually went to the banks and we asked them that this is a good business proposition and we feel it makes business and commercial sense, so you should look at it. Initially we did not get that sort of response. There were a lot of misunderstandings, and the banks were not really convinced that it does make a viable business sense. But subsequently, once the few players went into the market and the market starts developing, then we have now seen a lot of interest from the large players. When we started building up this regulatory framework, there was a view in State Bank of Pakistan that we should first let the market develop, and only once the market is developed, we should come up with a regulatory framework. But we also observed that the market on its own may not be able to develop. And we also realized that there are market participants who are waiting for some sort of nod from the regulator. So we thought that appropriate regulatory framework would basically give that sort of confidence to the market, where they will see that the regulator is basically trying to facilitate the market. So that would be a positive factor. We need to come up with a regulatory framework that would allow the banks to, for example, make person-to-person transactions with a relatively easier KYC and customer due diligence requirement. Similarly, the requirements for opening of bank accounts, they are very stringent in Pakistan, and those requirements were also suitably tailored for opening of accounts in branchless banking mode. For that, what we created in fact different tiers in branchless banking account, and then according to the transactions or the volume of the transactions and the size of transactions that was being allowed in case of each category of deposits, we came up with the KYC and CDD requirement. One of the major benefit that State Bank of Pakistan has was the national database of all the citizens in Pakistan. So we have what we call computerized national identity cards of all the people, and lot of information is gathered by NADRA, which is agency responsible for collecting all the information of all the citizens in Pakistan and issuing CNICs. And we have put a lot of comfort, in fact, on the CNICs, and that database gives us a lot of flexibility in coming up with a flexible regulatory framework for branchless banking. We felt that if it is a telco-led model, then all it will do will be basically make transactions from one person to another person, and we did not think that telco will be able to, like, for example, offer saving products, because if we allow the telcos to do that, the telcos will become a bank, and you can't do so without having a banking license. And in our view, the financial access does not mean the ability of only making transaction. It means that the framework should be able to provide like saving products. It should be able to provide lending products and host of other services that a financial institution provide, including insurance and things like that. So from that perspective, our ultimate objective was to basically make these financial products available to all the customers in Pakistan, and that would have been only possible if there was a bank behind all this effort. So that was in fact the major reason we felt that a bank-led model should be appropriate for Pakistan. A supplementary factor in that respect is that the banks in Pakistan enjoy substantial confidence from the general public. There have been few bank failures in Pakistan in the history of Pakistan, but in all the cases, State Bank of Pakistan was able to resolve those banking crises in such a manner that the depositors did not lose money. So that has resulted in a lot of confidence in the general public for banks. So we thought that it would be easier for the general public to basically give money to a agent if they feel that there is a bank behind that. One reason why we have allowed telcos to basically establish microfinance banks was to encourage competition, because we felt that the telcos are very eager to undertake this business as compared to banks in Pakistan, and they can't do so because they did not have a banking license. And because of our own reasons, we wanted the branchless banking in Pakistan to be, or mobile banking to be, a bank-led model. So we felt that one option could be to allow these telcos to establish microfinance banks. And when we allowed telcos to establish microfinance banks, we basically also explained to them that while we will allow the telcos to undertake branchless banking through this mode in the beginning, but subsequently after some time we will also expect from this framework to do microfinancing. So through that, basically we were trying to achieve two priority objectives. One was the branchless banking, and the secondly was the promotion of microfinance banking. So we feel that will create a lot of competition in the market. And now when the larger banks, they saw the telcos coming into this market through microfinance banks, they have also started making preparations, and I think that has been a very positive development. The real benefit to the economy, to the people, will come when the banks starts offering other products. We are in fact very excited about the developments that have taken place in the branchless banking arena in Pakistan, and our objective is basically one to enhance the financial access in the Pakistan. At the same time, we very strongly feel that through this mechanism, the currency in circulation, or the reliance of the economy on the currency, that will substantially reduce. Pakistan, like many other developing countries, the people do a lot of cash-based transactions, and we feel that those transactions will gradually be replaced by the electronic transactions. And we are basically making a lot of other efforts in this area through promotion of, like for example, RTGS and other payments modes. So that's the ultimate objective, where we will see majority of the transactions being carried out through this electronic platform, and then majority of the people have access to the saving products, to other financial services that can be offered by the financial sector.